Welcome to Inside India. I'm Sri Jegarajah. Your headlines. Indian markets looking to claw their way back from 10-month lows amid the broader rebound that we are seeing in Asian markets today. This as China stands firm, warning it will retaliate as President Trump escalates his trade war, threatening to hike tariffs by a further 50% if Beijing doesn't back down. But a more conciliatory tone from India, the country's foreign minister speaking to his US counterpart with the hopes of achieving a trade deal. Right, so the question today for the Indian markets, which join us in about 45 minutes, is it going to be a turnaround Tuesday like what we are witnessing across the region with their Asian peers? Here's what Gift Nifty futures are indicating for what it's worth, 22,687. So yes, we are looking at a rebound. But the big question is just how sustainable is that rebound given the balance of external risks and the volatility that continues to unfold in the global context and emanating from this entirely new tariff regime that we are seeing. Nifty lost 3%, by the way, in Monday's session, its worst performance in 10 months. Asian markets are looking like this. It is looking a little bit more brighter, with the exception of the Jakarta Composite, which is down heavily, playing catch-up because it was closed, so it was spared the brunt of the sell-off that we saw on the Monday session, but now back in action after the holiday, and we are seeing it play catch-up and really express that pent-up selling pressure that's been in the markets there. The JCI, the benchmark in Indonesia, down by over 8%. Now, China warning that the US will launch more countermeasures if President Trump proceeds with his threat to hike tariffs by a further 50% if Beijing doesn't back down. China's Ministry of Commerce calling the US threat a, quote, mistake upon a mistake, saying it will never accept Washington's blackmail and they will fight this to the end. Trump had threatened to impose additional tariffs if China did not withdraw its 34% tariff, which was in response to Trump's reciprocal measures by Wednesday.
I have a great relationship with President Xi. I hope it's going to stay that way. I have great respect for China, but they can't do this with just... we're going to have one shot at this, and no other president's going to do this, what I'm doing. And I'll tell you what, it's an honor to do it.
India's foreign minister speaking with his US counterpart Marco Rubio in a phone call on Monday, the two discussing tariffs, with India pushing to conclude a BTA, bilateral trade agreement with the US. India has said it has no plans to retaliate against Trump's tariffs. Meanwhile, Indonesia's markets are back online after an early trading halt. JP Ong's tracking this morning's move and the JCI down by over 8%. So as we expected, JP, a lot of pent-up selling pressure there.
Yeah, absolutely, Sri. And they did have that 30-minute trading halt earlier on today after stocks did fall by precipitous fashion, that is. And this also after Indonesia itself, or the IDX, imposed tighter trading regulations governing when a trading halt will be enacted. In fact, they said that if the stocks fall by more than 8% at the start of the session, it will trigger a 30-minute trading halt, which it actually did. The next step would have been, if it fell by 15%, they would trigger another 30-minute trading halt, and then a 20% decline would mean the trading would be off for the entire day. But fortunately, if you can call it fortunately, you're seeing that the Jakarta Composite is starting to just even itself out after that 9% decline at the open today in Indonesia, down just by about 8.5% in today's session. But there are now concerns that the tariffs being implemented by the Trump administration to the tune of 32% in Indonesia will impact actually the business environment there and also the economic and market outlook. Now, we did speak to Karin Chair Aninia Bakri earlier on today about whether or not he thinks that the government of Indonesia will retaliate. He does say that they are still open to talks and does not believe that it is in Indonesia's best interest to actually retaliate against the U.S.'s tariffs. Here's what he said.
I think the president has made it very clear to, number one, stay calm, and number two, stick with the plan to promote domestic economy, negotiate diplomatically with the U.S., not retaliate, and lastly, also open up alternative markets, right? I believe this is the way to go, with the US being the largest trading partner of Indonesia. And we believe that Indonesia is also a strategic geopolitical and geoeconomic partner to the US, being the largest economy in Southeast Asia, the only country in G20, the largest Muslim majority democracy, and so on.
So a lot of efforts to try and assuage market sentiment out in Indonesia today. But the other thing to watch out for is the rupiah, which has weakened also in today's session. At one point, it did touch record lows and even and flirted with 17,000. The Bank of Indonesia did actually also state that they have intervened in offshore markets, even during the prolonged holiday in Indonesia, because they said it's down to the reciprocal tariffs of the United States and also the retaliatory tariffs of China, meaning that one of the things that are complicated things aren't just the rising tariffs from the U.S., but also the potential for other countries such as China to retaliate in such fashion and could complicate and also muddle the outlook for Indonesia. You're seeing the rupiah responding and weakening to 16,835, Sri.
JP, outstanding. Thank you very much indeed for that, sir. We're also keeping an eye on the currency markets and the Indian rupee, which is at record lows. Remember, we are going into an RBI meeting today, and the expectation is that we are going to see a 25 basis point cut to the repo rate, but perhaps an outside chance that the RBI may signal a willingness to do more. Let's bring in Harsha Upadhyaya, Equity CIO at Kotak Mahindra Asset Management. Harsha, great to have you on the program. It was interesting yesterday when you saw the market action. The resiliency was with the likes of Zomato, Hindustan Lever. Is that where we want to be? Are they the stocks that we need to own, those that are domestically focused, and the banks to ride out this volatility?
Good morning. You're right. I think India has been predominantly a domestic-focused economy, and most of the listed space is also looking at domestic-focused businesses. And clearly, incremental money needs to go in this basket. And that's what we are seeing already in the first few days after the tariff increases were announced. I think in the very short term, there may not be any big impact on the overall growth, but we do believe that overall growth is also going to get impacted by about maybe 20 to 30 basis points at the full year.
Harsha, how strong and how sustainable do you think the rebound on the Indian benchmarks are going to be today, given the balance of risks out there?
The situation is still very fragile, very unpredictable, and markets hate uncertainty. So to that extent, it's very difficult to say that whether we have seen the bottom of the market in the very short term. I think next few weeks, we are going to hear more about the entire tariff scenario. So to that extent, markets could remain volatile for the next few weeks. And also the earnings season, which is coming up in the next couple of days, is unlikely to throw up any great positive surprises. So to that extent, I would say it's going to be more of a downward bias or a consolidation for the next few weeks.
Harsh, a great point about earnings season, which could be the next potential negative catalyst, especially if we see heightened guidance risk show up in the commentary. To what degree has that been priced, and which sectors are the most vulnerable in that regard?
If you look at the listed space, IT services and pharmaceuticals are the two biggest exporters who have a lot of dependency on the US economy. However, these two segments have been left out of the tariffs ambit as of now. So there may not be any direct impact, but if US were to go into recession or very slow growth, it could impact discretionary spending in the IT sector and could impact the guidance from IT companies. However, we at this point of see very little impact on the pharmaceutical exports. There are other smaller sectors as well, for example, auto components, chemicals, and few others, which could also be impacted over a period of time. However, we need to see how, on a relative basis, Indian chemical exports or Indian auto exports will be taxed as against some of the other competing economies. So at least at this point of time, we believe that while it's going to be higher prices for sure, and it's going to either defer the demand or at least disturb the demand in some cases, it may not be so bad when you look at it from a relative perspective. India may still be able to do business with the US at this point of time.
Harsha, How concerned are you about the major exporters in this context? Because when you look at the price action with Tata Motors, there was a distinct concern amongst the market and amongst investors about Jaguar Land Rover and the suspension of shipments to the US. How are you approaching the export sector?
As per SEBI regulations, I will not be able to comment on individual stocks, so I will not be able to comment on any stock. However, there are certain companies in the Indian listed space which have a reasonable exposure to US exports, either directly or indirectly. That's where I think things are still very fluid. Although you may be able to get to the adverse impact on a level 1 kind of an impact. However, if there is an indirect impact, for example, if any of the Indian exporters are exporting to some other country and from that country the equipment manufacturers are once again going into US, how those second order impacts will pan out is difficult to understand at this point of time. And as I said in the beginning as well, whenever there is a bit of uncertainty, markets don't like that. And that's what we are seeing in terms of the price reaction to some of the companies which have relatively higher exposure to US exports, either directly or indirectly.
How long is this uncertainty going to last, Harsha? Because India is no stranger to financial crises, from the COVID crash to the GFC in 2008, and then Ketan Parekh back in 2001, and the dot-com bubble, the Harshad Mehta scam in '92. Are we talking about volatility persisting for the next 2 quarters or longer as this uncertainty perhaps over the tariffs washes through the system?
It's very, very difficult to predict in terms of the impact or the extent of market volatility at this point of time. But I think it would be fair to assume that at least for the next couple of weeks, markets are going to remain volatile. And from a valuation perspective, at least the large cap basket is in and around the large cap, in and around the long-term valuation range. So to that extent, there may not be too much of valuation risk for somebody who is coming into the market now and holding on for next 3-5 years, at least on the large cap space. However, the mid and small cap space is still a little bit more expensive as compared to history. So that's where probably you're going to see a little more volatility than large caps.
And that's where you want to be then, Harsha. You like the large caps and you like the large cap banks in particular, yes?
That's right. That's right. And that's where we see relatively a better valuation comfort and also a lot more steady stream of earnings, given that some of the external factors may not impact them as much as some of the exporters.
What are you pricing for the RBI this week, Harsha? Because there's a very interesting conversation now about 25 basis point cut being priced in and a willingness amongst the RBI to perhaps do more deeper rate reductions given the volatility and given the external balance of risks. What is being priced by the market, and what do you feel is the most appropriate course of action from a stock market perspective for the RBI?
We do expect 25 basis points of cut in the forthcoming monetary policy announcement. We believe that inflation is clearly under control, and with the way the commodities have fallen in the last few weeks also gives us comfort that probably going forward, inflation is going to remain under control. And that domestic food inflation is also under control, given that agricultural production was very strong. And there are expectations of a reasonable monsoon next year, as well as reservoir levels are also fine. So overall, I think inflation is well under control. And if inflation is in and around RBI comfort level, then we think there is more room for RBI to go and cut. And anyways, as you rightly mentioned, there is a need to support growth as well at this point of time. Earlier, maybe if you had asked me the same question 6 months back, I would have said this is going to be a shallow rate cycle with probably 1 or 2 cuts. But at this point of time, we tend to believe that we could see probably 3 to 4 interest rate cuts during this financial year in India.
And how would you characterize liquidity conditions? Because that is something that the governor has been laser focused on since he began his tenure last December. How supportive are liquidity conditions, Harsha? And does the RBI need to do more, perhaps, in terms of liquidity-related measures?
I think they have clearly eased the conditions from the month of December, and that has been ongoing exercise. And very recently as well, we saw 2 more installments of liquidity infusion. So overall, I think liquidity situation has improved quite a bit in this month. And along with the rate cut, we could also see some more measures which will help overall stabilize the growth in the economy. So overall, I think there is a clear message from monetary authorities that inflation seems to be under control, and there needs to be some support that is required on the growth side, and that's what we seem to be getting at this point of time. So overall, I think the conditions seem to be suggestive of further cuts and further easy liquidity situation.
Yes. So Harsha, your message would be, if I were to summarize, stay invested, and you're maintaining a positive outlook on India's long-term growth trajectory. Does a 12-month target of 26,000 on the Nifty 50 make sense to you then, given the circumstances?
It's again difficult to predict some of these numbers, but clearly over the next 1 year, the earnings growth was expected to grow around 13 to 14%. We could expect a little bit of a lesser earnings growth given what's happened to the external environment. Maybe high single digits to low double digits is what we can probably see at the end of the financial year. If that is true, then market should also move in line with that earnings growth, given that valuations are around fair levels at this point of time.
Harsha, we'll leave it there, sir. Thank you very much indeed for joining me with those insights and the outlook at this very volatile time for global markets. Harsha Upadhyaya there from Kotak Mahindra Asset Management. Right, let's take a look at the commodity complex. Oil prices recovering this morning after yesterday's sharp slide. We got WTI at 61.38 and Brent crude 64.87, both of them putting on just over 1%. Let's take a look at the gold price as well. And we are seeing that tick higher, making a run once again on 3,000. And even gold wasn't spared, remember, in terms of the risk aversion and the downdraft on Monday. So that really tells you something about sentiment. Still to come on the programme. As Indian businesses try to game out how this trade conflict will play out, we'll hear from the newly installed president of the Federation of Indian Export Organisations, SC Ralhan. Stay tuned for that conversation. We'll be right back. Welcome back to Inside India. Some stories on our radar this morning. The European Union retaliating to US tariffs with levies of their own. According to a document, 25% counter tariffs will be put on goods such as diamonds, eggs and poultry. EC President Ursula von der Leyen saying Brussels is still open to negotiation.
We have offered 0 for 0 tariffs for industrial goods, as we have successfully done with many other trading partners, because Europe is always ready for a good deal, so we keep it on the table.
Meanwhile, Mexican President Claudia Sheinbaum says the country would like to avoid reciprocal tariffs, but that she won't rule it out just yet.
The increase of 25%, which we won't rule out, but we prefer continuing with talks before any other measure. It would represent increases in the Mexico price. So, of course, we want to protect Mexican industry, Mexican companies.
And British car maker JLR says it's halting shipments of its UK-made cars to the US as it figures out how to navigate tariffs. British Prime Minister Keir Starmer visiting a Jaguar Land Rover factory in central England overnight, saying that the UK will help British car makers weather the storm. Shares of JLR owner Tata Motors slid 10% in India yesterday. Now, pivoting to the tariff impact on Japanese automakers. Japanese Prime Minister Shigeru Ishiba said that the government will continue to ask the US to lower tariffs against Japan. CNBC's Kaori Enjoji, who has been following the story, joins us from Tokyo now. Kaori, how successful do you think these overtures are going to be ultimately?
I think the short answer to that is way too early to tell. They're putting a team together, but I think the crux of the matter, as you pointed out, is the auto industry and the huge 25% tariffs that are going to be slapped onto them unless they can negotiate a better deal. So just break that down. 1.3 million cars were exported to the United States from Japan last year. That is 28% in terms of volume-wise. So you can tell how big an impact this is going to have. So anytime you talk about cars, the buck stops at Toyota, not because they're the biggest player, but because they hire so many people all the way down the food chain. You're talking about tens of thousands of suppliers that might really be obliterated if these tariffs come into full force. So that's one problem. The other thing is, which is really telling, is the trade minister, the top official in the cabinet, going to a company called Fuji Heavy Industries, which makes the Subaru brand. That was his first stop on Monday at the start of business. And that is because Subaru's main market is the United States. They have a no plan B, and most of the cars are shipped from Japan. So this is a problem. So you also have companies like Nissan saying, look, we're not going to take orders for some of the models that are made in Mexico, because you know the story there. We're going to ramp up production at our existing facilities in the United States. So I can't stress the importance enough of how much cars are going to play in this comprehensive package that Japan wants to make a deal with.
Kaori, so the conversation now is about the global central banks and the treasuries and the finance ministries of all these countries that are affected to come up with a plan B to Trump-proof or tariff-proof the broader economy. As far as Japan is concerned, what kind of comprehensive package can we expect to soften the blow of what could be an all-out trade war?
Well, it's Tuesday morning here, and there's a lot of movement. So on the finance ministry front, they're going to put the point person there in charge, possibly talk about the yen, because Trump has said that a strengthening yen would work in the favor of what he's trying to push forward. And this works well in a way, because the Bank of Japan doesn't have to be worried about the yen appreciation should they decide to raise interest rate, which is a whole different story. And then you have the trade minister, the cabinet secretary confirming a short while ago that he will be leading the negotiations with his counterpart in the U.S. So that will be whether or not they can offer any kind of concessions to the U.S. Right now, the talk is maybe LNG, because Japan is a big importer of that. There could be more capital investment discussions. There could be, of course, absolute terms of renegotiating these tariffs so that they come down for some of the Japanese players. I think that is going to be a critical discussion as well. And, of course, on the domestic front, the top government officials had their first official meeting to deal with this Trump shock, is what they're calling it here. And what they're discussing is possibly low-interest financing for small and medium-sized enterprises. This is a very similar strategy to what they took after the Lehman crisis, after other financial crises as well. So I would expect that, and possibly, if the manufacturers have to pass down some of the price pressures to the consumer. Remember, this is an election year in Japan, so we could see some kind of cash handouts too for the Japanese public, which is already reeling from higher prices.
Similar story out here in Singapore. It's an election year here too. Reorientation, diversification, the exploration of alternative markets, and that has been a narrative that has really predated these tariffs, Carrie, on a global basis. But this has taken on added urgency given the events of the last few days. How is that being expressed from Japan's point of view?
Absolutely, Sri. I mean, the more friends you have in this situation, the better. So, you know, what you're talking about is the China +1 strategy, which is backfiring horrendously for corporate Japan. So the last trade war was, look, you're relying too much on China, you have to diversify. So the diversification route was to manufacture more in Southeast Asia, for example, Vietnam, Thailand. Look at the tariffs that they've slapped on that. So this is backfiring. So they need to sort of go back, retrace their steps, and see what kind of new angles and new avenues of growth they can pursue, not only with China, but with their, excuse me, I'm getting blown away here, the ASEAN partners in terms of a free trade pact, and also with the European Union. And don't forget the UK because of Brexit. They're a lone entity. And, of course, South America. I think all of these trade agreements, not to mention TPP, the Trans-Pacific Partnership, are back on the table. And I think this is really the approach they're trying to take. Japan was very quiet while everyone else was yelling over the weekend in response to these tariffs. And they were working on this. And this is the kind of all-in strategy from the corporate side and also from the political side that really Japan excels in. But you're dealing with a very, very volatile partner, a discussion partner. So I think it's way too early to say whether or not this strategy will bear fruit.
I'm sure we could see some, look forward to some alliances with India, maybe. And there's even a conversation between China and India and closer economic partnerships there, which is extraordinary, really, given the adversity between those two countries. Carrie, thank you very much indeed for that. We appreciate it. Let's turn our attention once more to the Asian markets. This is how they are stacking up. We are seeing a turnaround in some. Others, it's a different story, and we are seeing an extension of the selling. Jakarta Composite is the worst hit. Pent-up selling pressure. Market was closed on Black Monday, so you're seeing the full ramifications of the tariffs on Indonesia and the Indonesian benchmark, down by 8.5%. Coming up, we turn our attention to India's private markets. We'll hear from VC giant Lightspeed India about how the current market turmoil is affecting sentiment. More on the other side of this break. Do stay with us. Welcome back. We are counting down to the market open in India, and this is how we are shaping up. It looks as if we are in for something of a turnaround and a rebound for the broader market. Nifty futures are suggesting an opening number in the region of 22,621. So we are looking at about 500 points to the good for the Nifty 50. Let's give you dollar rupee, the exchange rate at 85.90.60 heading in to the RBI. So we are seeing some stabilisation there as well after the rupee yesterday logged its steepest one-day decline in nearly 3 months. Now, one story that we are watching this morning is Apple, which is reportedly planning to ship more iPhones to the US from India, this in a bid to offset the impact of Trump's tariffs on China. According to a note by Bank of America, Apple could meet about half of its US demand for the device if it redirected all its India-made iPhones to the American market. Prior to the tariffs, Apple was on track to make about 25 million iPhones in India this year, with just under half being supplied to the local Indian market. Most of Apple's iPhone components are made in China, but in recent years have been turning more to India to assemble the device. However, the reports also indicated that these adjustments would be a short-term measure as Apple tries to secure exemptions from Trump's tariffs. The current situation being too uncertain for the US company to change its long-term investments in the supply chain. Now, the market turmoil could further challenge India's private markets, which have been showing signs of resilience after a funding slump in 2023. Venture capital had been slowly picking up, driven by sectors like fintech, EVs and AI. Startups had been raising smaller, more strategic rounds as investors focus on profitability and sustainable growth over hyperscaling. Private equity firms are also ramping up deals, especially in infrastructure and renewable energy, betting on India's long-term growth prospects. However, exits do remain a challenge, with IPO markets still volatile, and the industry may be forced to recalibrate yet again. Let's bring in Dave Kare now, who's partner and advisor at Lightspeed India, which ranks amongst the 10 biggest VC firms globally. Dave, great to have you on the programme. So sentiment very grim now in the public markets. Is it a similar narrative? Is it going to be a similar narrative for private markets in India?
Thanks for having me on. No, I don't think so. For the time being, no, we've seen many cycles play out across the last 20, 30 years in India and globally. And for us, we calmly keep on investing through cycles. In fact, some of our best investments and some of the most innovative companies start in down cycles. So we are sure that even through this period of time, companies will persevere and adjust. And also new companies will appear that innovate and put India on the world technology map.
How concerned are you, Dave, about the return of a funding winter?
Not so much. I think, there have been cycles, but I think there's a whole resiliency to Indian entrepreneurs that is really fantastic to have seen. India has a very large consumption story. Approximately 75% of venture dollars in India, venture rupees in India, go into consumer companies, whether, like you said, in fintech, financial services, education, commerce, and other such areas. And more recently, we've been seeing a whole wave of companies that harness energy and consumer markets. For example, one of our companies, Solar Square, is the largest implementer of residential solar across India, and that's seeing fantastic growth over the last couple of years. So I think, I don't think there's too much of a worry about a funding winter. Indian startups and the funding environment have been pretty steady in the last year or two. And over the last 20 years, the trend is up and to the right. And so we'll keep on investing through all these cycles.
Dave, let's talk about Byju's. And you were, Lightspeed was an early investor in Byju's, but it's been plagued by a number of problems, and that's putting it lightly. Fraud, mismanagement, legal issues, misconduct. How much has this tainted the ecosystem for the private markets and edtech in particular?
So India's education market is very large. Just the college entrance exam sort of market is about $20 billion a year, and then K through 12 and other government exams are even larger. So that endures, whether it's one company or the other that comes through. I don't think there's been too much of an impact on investor sentiment in the market because of them. In fact, we are super confident about the education sector in India. One of our recent investments is in a company called PhysicsWallah, which is the largest education technology company in India right now. And we're very sure that this market will endure. These countries in Asia like India, Korea, Japan, China have a very exam-centric culture, and education is prized in all families. Spend in education is very steady. And so we continue to be excited about the markets. And I think this is broadly investor sentiment across the market.
And PhysicsWallah is exciting because it helps those underprivileged to get access to education, which is a wonderful model and one that is needed in developing countries. But just getting back to Baidu Ravindran says that the company is broke, not broken. Do you believe that?
I'm not going to comment on what he says. I don't know what data he's looking at. So I'll just say that we're excited about the education sector in India and have put our money where our mouth is in terms of the largest edtech company in India right now, PhysicsWallah.
Right. What about health? What about health tech, Dave? What are you doing in that area? And talk us through the investments that you've made there.
Yeah, the thing about India is that it's a combination of what happens kind of like the Israel model, where innovation in India is exported and sold into global markets like the US and Europe and so on. And that happens particularly in software. But India also has a domestic market, and a lot of technology is sold into the local market in India. Healthcare is an example of that, where healthcare technology companies from India have become leaders in the US $4 trillion US healthcare market. We've got a company called Innovacer that is one of the largest there, started in Delhi, and the founders are now based out of San Francisco. Very successful company in the value-based care market in the US. So that's done really well, that whole sector. And AI is supercharging the creation of new healthcare technology companies from India serving the world. And we also have companies in India serving India. Of course, the need is large. We made an investment last year in a company called Qure.ai, Qure, which has over the last 8 years aggregated 1.5 billion images of X-rays and CT scans, and can predict things like lung cancer, TB, and so on in patients just with an X-ray. Something that otherwise would take weeks to months to do, and it's really saving lives. And saving lives not just in India, but in Africa and other parts of Asia. So we're seeing both types of technology coming out of India for healthcare, one facing the developed countries and one addressing developing country needs. So we're very excited about that. India, I think, has an advantage given the large population and the wealth of data available to train all these frontier models to serve Indian needs.
What are you looking at, and what are the most exciting prospects in terms of fintech in India, Dave? And do Razorpay and Pocket FM speak to that, or is it becoming quite a crowded market?
So all these countries are in different, these companies are in different sectors. In terms of financial services, as you know, is the largest portion of the public market in India. The banks and other such companies, NBFCs and so on in India, are the largest portion of the stock markets in India. It mirrors itself in financial technology investments itself. We've got companies that are leveraging the roughly $4 billion a month that are coming into structured investment plans, or SIPs, that retail investors in India are directing towards the stock markets and other assets. Companies like Centricity and Stable Money are taking advantage of that. You mentioned Pocket FM. Interestingly, Pocket FM is the first consumer technology company from India to make it big in the US. It's an entertainment company and invented the category of audio series, or think of it as Netflix for audio. And so we're seeing increasingly companies from India dominating on the world stage, and we're really excited for that reason about ventures coming out of India.
Dave, final question. What are the prospects looking like in terms of the exits, and what makes most sense? Is it a strategic sale, or is it an IPO, or are those options looking increasingly challenging in the current environment?
Yeah, for the longest time, I think since the early 2000s, there were no technology IPOs for several years. The early companies in the early 2000s were InfoEdge and MakeMyTrip and so on. In the last 3-4 years, we've seen a surge of technology IPOs, primarily on the consumer side. Think of Zomato and more recently Swiggy and others in the market. And I think the prospects for that remain fairly good. We'll see what the long-term impact of all this recent market turmoil is. The other exit sort of path in India is secondary sales in the private market, and we're seeing a lot of that between private equity investors coming into the market. KKR and Partners Group came into one of our companies, the largest HR software company in India called Darwinbox, and there are several other such examples. M&A remains sort of very light in a country like India, unlike what it is in the US, for example.
Dave, we're just out of time. It's been fantastic talking to you. Thank you very much indeed for your insights. Dave Khare there from Lightspeed India. Let's head out now to Abu Dhabi, where Dan Murphy is standing by for Access Middle East. Dan, give us the highlights, and great to see you.
Hey there, Sri. Great to see you as well. We have an exclusive interview today with the Emirates Group President, Sir Tim Clark. He tells me the aviation industry is in uncharted territory as President Donald Trump's tariffs and trade disputes weigh on global growth and threaten to drive up costs for airlines worldwide. So we're going to be bringing you that interview in the next hour. We're also getting the latest on the impact for GCC economies with PGIM's Mohammed Abdul Malek, and I'm also speaking with Majid Al Futtaim's CEO Ahmed Ismail about the impact for Gulf consumers. So we have a really busy show ahead, Sri. Hope you'll join in.
Absolutely. Looking forward to it, Dan. Thank you very much indeed for that. We are counting down to the market open in Mumbai. Opening trades after the break. Welcome back. The Indian markets are just joining the trading day. Let's give you a look at the Nifty 50, 22,446. and rising. We're up by 1.5%. And gathering some momentum there at the open, so this is good news. But the big question is whether an up move is sustainable given the balance of external risks that have been and will continue to bully global market sentiment. We've got dollar rupee stabilising at 85.72, and the markets are expecting the RBI this week to cut benchmark repo rate by 25 basis points, possibly an outside chance that they could go further and there could be a deeper rate cut, but that is a possibility, but a slim possibility. It's not really a consensus view. The guidance will be interesting to see if they communicate a willingness and signal a willingness to do more. Right. Sectors across the board rebounding after the sell-off yesterday. Strong gains in consumer stocks, realty and the autos index. India is playing nice, looking to negotiate a trade deal with the United States after the harsh tariffs from the Trump administration. But Indian exporters are asking for help, calling on the Modi government to support them in managing the impact of the new levies. Let's get a view from Sri Jegarajah, the new president of the Federation of Indian Export Organisations. Mr. Jegarajah, thank you very much indeed for joining me, sir. What is your message from your membership to the Modi administration during this very uncertain time in global trade?
Hello, I can't hear you.
Yes,
Hello?
sir. I can hear you, sir. Let me repeat the question. You're on Inside India.
Yeah.
Mr. Jegarajah, what is your message? What is your organisation's message to the Modi government during this time of great stress in global trade?
Well, the tariff imposed by the US is, the India is slightly at an advantage as compared to our competitors in the world, like China, Taiwan, all. Vietnam, for example, Vietnam also. But 26% tariff is quite, our buyers may not be possible, it may not be possible for the buyers to consume that. So they are talking, we are regularly getting the calls from them for a huge discount and all this. But I think India is a better place. I think the investments will come to India. It's a good time for India to welcome them. A lot of new companies are coming. The discussions are going on for them to have the collaboration here in India. The overall scenario is good. But we are asking the government to at least again give some intervention. Whatever is WTO compatible, the roadmap or the intervention. So that if the exporters in India give some discount to the American importers, so they are compensated by the government of India.
Yes, yes. Which sectors, in your opinion, are most vulnerable? It must be the car makers, yes?
Yeah, car makers. You mean in America?
In India.
Or
which
in
export
India?
sectors are the most vulnerable?
Yeah, fisheries is very affected. But there are a lot of other items. Pharma is good. I think there are a lot of good chances for the leather industry. There are good chances of furniture industry, electronic industry. A lot of good, but at the same time, there few of the commodities they are under stress, and they have come under more stress because they
Yes.
already have the dumping duty and all this. I think
Yes.
the government should come forward to give some help to them. But
Yes.
we are talking to the government. That is going on. Bad discussions, bilateral trade agreement discussions are going on. So we have requested the government. I met the Commerce Secretary yesterday So we
Yes.
have requested him, the earlier the bilateral trade agreement is signed, the best for the India. I mean, before the other countries they sign the FTA with America, I think it is the better for India to sign the earliest possible.
I understand. And that was my next question, Mr. Ralhan. If and when the BTA is signed, what will it mean for India's export sector? Who will be the biggest beneficiaries of this?
It's very difficult to say which are the most beneficiaries, but I think most of the export items, the products will be beneficial. We have already given them the list to the government of India. The engineering sector will be beneficial. Items which India doesn't lose much in giving the zero tariff to the to American government.
Yes.
Yeah.
Mr. Ralhan, in the meantime,
they are in the process. They are already calculating where India is losing more, but India will have to compensate a little bit for the good of the exports, because we are talking about the $1 trillion exports. So for that, I think the BTA is very, very important for the exporters in India.
Of course. Mr. Ralhan, in the meantime, how active is your organisation and how active are Indian companies in terms of exploring other partnerships, exploring other markets and other export destinations? And are those destinations in Europe? Are they in other parts of Asia? Are they in South America? Or could they even be with China?
China is a very tough market. It's not that easy to explore export market to China. But anyway, we are meeting the government officials. I have already met a number of government officials, the senior officials with the government of India, and we are talking to our members as well. We are talking to them, we are writing to them, give us the ideas. Even the Commerce Secretary, which I met him, I'm thankful to him. He has said that give us some good proposal for the good of the exporters. I mean, the government of India is very positive in listening to us. That's a very good sign. Yeah.
Yes. How concerned are you, Mr. Ralhan, about currency market volatility in the foreign exchange markets? What are you pricing in terms of the Indian rupee? We seem to be having a problem with Mr. Ralhan's connection. Perhaps we can try to reconnect with him before the show is over. But in the meantime, let's take a look at the Asian markets. We have Jakarta, which is the loss leader at this point in time, and only logical given the fact that it was spared the sell-off on Monday because the market was closed. So you're seeing the full impact today. I think we can get back to Mr. Ralhan from the Federation of Indian Export Organisations. Mr. Ralhan, my question was about the currency, the Indian rupee. Is that favourable for you at the moment, or do you see volatility in foreign exchange markets, and is this going to be a problem for Indian exports?
Yeah. At the moment, we are expecting some volatility in the US dollar, the US rupees. So that will compensate the Indian exporters at the moment, because they are giving some huge discounts to the American customers. I mean, we are in touch with the American customers with some formula. They are
Mr. Rahan, we'll have to leave it there, sir. If you can hear me, thank you very much indeed for joining me with those insights from your perspective. SC Rahan there from the Federation of Indian Export Organisations. Right, I'm afraid that's it. That's all the time that we have for the programme today, but we've got plenty of interviews lined up throughout the rest of the week from different angles on Indian businesses and markets, including the CEO of Indian airline Indigo and fintech giant Paytm. That's all we have time for today on this edition on Inside India. Keep watching CNBC Access Middle East coming up next with Dan Murphy. Have a good day.